What's going on? This is Lincoln with Tagger Finance. Basically, I decided to completely reverse course. I did the call debit spread arbitrage in the last video. I went ahead and closed out of those positions. I think I was up about 30% on the Micron one, and then made a couple bucks on the Uber one that I opened. Then I added another 80 bucks to the account, and want to introduce the Robinhood 1K challenge. Basically, I'm going to be trading options, looking to gain about 2 to 5% per week. I'm going to make a video every week, post them on Friday afternoons after the close. Basically sum up the trades. I'm going to be looking to collect time premium, theta, so I'm doing some poor man's covered calls, some wheels. I'm going to do some call debit spread arbitrage to show you guys how those work a little bit more. So yeah, that's the idea. So here's kind of the introductory video, and I'm also going to do a short explanation on what a poor man's covered call is and kind of how that differs from a regular covered call and how you guys can do it. So that's what I'm going to jump into right now. Here is the poor man's covered call. We are basically just trying to simulate a covered call position, but with much less capital. We're doing it with an in-the-money call instead of buying the 100 shares outright. So it is a synthetic position. Basically, it gets its name from the reduced risk, and then there's a lot less capital requirement to set this up. So it is a bullish position. We're going to start it off by buying an in-the-money call with a long-term expiration, and then we're going to sell out of the money call with the shorter term expiration. And I did multiples on those because I'm going to do this multiple times. So if we look at this example that I kind of set up, so here we have a stock that's at $100. We're going to purchase our in-the-money long-term call. So I did a January of 2021 $90 call. So it's $10 in the money at this point, paying $15. So you got $10 of intrinsic value and $5 of extrinsic value. And then we're going to sell our out-of-the-money shorter term. So this is like a week out is basically what I did. A $110 call for $5, and that's all extrinsic value. So that's basically what we're going to do. And then when this one comes around and expires, then we're going to sell another one for October 23 or October 30 or whatever we decide to do. So basically we're going to run this multiple times and keep this same long-term in-the-money call. We can adjust it up or down if we need to, depending on when the stock moves. But that's the basic idea. So we are trying to keep this one in the money, and then hopefully all of these will expire out of the money, and that will be kind of our max gain range. So that is how you set it up. It's a diagonal debit spread. We take it in premium, and hopefully when all is said and done, we're making money. So that is the poor man's covered call. And now I'm going to jump into an example of one that I'm using for the Robinhood 1K challenge. So here's that. Alright, so here it is. This is an actual trade in the Robinhood 1K challenge. So I'll do a summary on how this position ends up. I was going to do it on GE, and then I changed my mind and did it on AT&T instead. I just kind of liked how the volatility looked and how the setup looked a little bit better. So I ended up settling on the $26 call. Price doesn't have to move too much to cover all the extrinsic value that I'm paying for this. The volume and open interest was decent, so I went ahead and sent this in, got a fill right away. So there's the long side of the poor man's covered call, and we're going to go ahead and sell one of the shorter term ones here. So I ideally was looking for a week out. You can see me looking at the October 9 ones expiring tomorrow. I went back and forth, ended up settling on the 28.50 October 9 call, so it's super tight. It's only 2 cents out of the money at this time, but figured for 11 bucks, and it would kind of get the ball rolling on this challenge, make things a little bit more exciting, so I went ahead and did that. Then I waited for a fill, which came a couple minutes later. Show a screenshot of that right now. So there it is. So here is the stock charts of AT&T. Is basically what I looked at, and it's actually kind of a dumb trade that I made, but kind of to show you why I ended up doing it. So I am a bit bearish on this. I know the poor man's covered call is a bullish position, obviously. You can see the RSI is building some strength and the MACD is crossing over, but I expect it to totally just get hammered back down by that 50-day moving average. I don't see it going below $26, which is why I ended up settling on that strike. I figured it would trade somewhere in that, I guess, $27 to $29 range for the next few months. So I figured I'd be able to collect some good premium as it goes. Every few weeks I'll sell another call, collect some premium, and then let it expire somewhere above 26 bucks. Figured I'd be making money in the long run. It was pretty low volatility. It's not the best setup for the trade, but this is what I'm looking at. I figured I'd be able to hit my 2 to 5% goal by doing this, which is why I ended up settling on it. I probably could have found a better stock to do this on, but I wanted to jump into AT&T, so that is that. I'd also like to add that this is especially dumb because it started to build some momentum there, and I sold that super tight call for tomorrow, so I don't really see it panning out super well, but I guess we will see. So as you can see, I was right so far, and that was a terrible decision to sell that super tight. It's a couple hours before the market closes on Thursday, so I guess we will see what happens tomorrow, but I sold that call for 11 cents, so break evens at 28.61, and it's probably going to cruise right through that. So good job by me. Good start to the challenge. We'll see. I mean, the market's up pretty big today, so I might drop back down tomorrow and pull AT&T down with it. So here's the position. Poor man's covered call. Got that longer term in the money call here. Basically synthetically resembling my 100 shares if I owned it and was doing a regular covered call. So there's that, and then here is my shorter term. It was out of the money, but it's currently in the money position. So there is the poor man's covered call, and that is the first trade. Well, not technically the first one that you guys have seen of the Robinhood 1K challenge. So hopefully it comes back down tomorrow and it turns out to be a good trade, but if it's not, I guess we will be battling out of a hole straight off the bat. So I'll catch you guys in the next one. Thanks for watching. If you have any questions or want to see anything different, let me know down in the comments, and I will see you in the next one.